Hello, everyone, and thank you for joining today's True Trading webinar. I'm excited to be here. My name is Mohammed Azim from Traders United. First, a risk disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I am a certified elite wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of elite wave theory. In addition to my work as an analyst, I am also an author and educator. I wrote Introduction to Elite Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise doesn't stop at elite wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex market. With that, let's dive into today's session. These are the today's session goals. Let me talk about macroeconomic events and data releases. I'm going to cover previous week fundamental analysis. Okay, the first one is the May 15th unemployment rate, Australia. And the second one is the Prelim University of Michigan consumer sentiment. That's the financial data report for the USA. Okay, let me talk a little bit about it. So, the unemployment rate, the top one, unemployment rate Australia. Okay, so on May 15th, 2025, we got the unemployment report. Now, what is the unemployment report rate? So, Australia's unemployment rate measures the percentage of the labor force that is unemployed and actively seeking work. It is a key economic indicator that provides insight into the health of the labor market and the overall economy. A lower unemployment rate typically supports the Australian dollar, while a higher rate may signal economic weakness and weigh on the currency. So on May 15th, 2025, we got the unemployment rate data. The previous number was 4.1%. The forecast was 4.1%, and the actual number is also 4.1%. Although the headline unemployment rate matched both the previous figure and the market expectations, the AUD-USD currency pair fell following the release. Let me show you the chart of Australian dollar currency pair. Over here, you see it's trying to drop over here. Let me zoom in a little bit. We will talk more about the AUD-USD currency pair in a minute. So the decline in Australian dollar versus US dollar suggests that traders reacted to weaker details within the broader jobs report, such as a drop in full-time employment or a rise in the underemployment rate. Such underlying softness may signal cracks in Australia's labour market and raised the risk of a more dovish stance from the Reserve Bank of Australia. Now, the market reaction and impact on the AUDUSD was that despite the headline figure being unchanged, the AUDUSD moved lower, which is a sign that markets were disappointed with other labor market components. This bearish reaction reflects increased concerns about economic momentum and speculation that the Reserve Bank of Australia may hold or even cut interest rates sooner than expected. So the conclusion is that on May 15th, unemployment uh, report did little to reassure markets about the strengths of Australia's labour market. With AUD/USD currency pair dropping after the release, traders likely focused on the softer underlying data rather than the stable headline rate. The downside move suggests a shift in market sentiment, with market participants possibly pricing in a more cautious Reserve Bank of Australia policy outlook. Additional labor and inflation data will be critical in shaping expectations for the Australian dollar moving forward. As far as the technical analysis is concerned, I have already discussed this in previous week sessions as well, that I'm expecting a drop in price action of AUD currency pair. Next one is the preliminary University of Michigan consumer sentiment. And let's talk a little bit about what is the preliminary University of Michigan consumer sentiment. UM is just a short word or an abbreviation to label it as University of Michigan. So the preliminary University of Michigan Consumer Sentiment Index measures consumer confidence in the USA economy based on household surveys. It reflects current financial conditions, future expectations, and overall economic sentiment. As a leading indicator, higher sentiment typically suggests stronger uh, future consumer spending, which supports economic growth and tends to strengthen the US dollar. Conversely, weaker sentiment may indicate softening economic momentum. Now, the preliminary reading is more market sensitive than the final version due to its early release. On May 16th, 2025, we got the number, and the number we got is 50.8. It's in red, it's less. In other words, market were expecting a modest rise in sentiment to 53.1. The previous number was 52.2, so the expectation was a little bit higher, and that was likely due to the signs of inflation stabilization or a resilient labor market in USA. However, the actual reading came in lower than both the previous figure and the expected number, pointing to renewed consumer pessimism and possible concerns about economic headwinds. Now, the impact and market reaction that we got on euro dollar is that the weaker than expected data undermined confidence in the strength of US consumer driven growth, leading to a softer USD. Now, if I show you a chart of euro dollar currency pair, let's go over here to the daily. So as a result, the euro USD moved higher in response to the disappointing sentiment print. And traders interpreted the data as a potential signal that the Federal Reserve may need to be more cautious with any future tightening or even consider rate cuts sooner than anticipated. So the conclusion is the sharp miss in consumer sentiment data prompted a bearish reaction inside the United States dollar index, the DX, with Euro USD rising in response. the data reinforces concerns about underlying economic weakness and casts doubt on the sustainability of consumer confidence. Moving forward, traders will monitor additional US data for confirmation as sustained weakness could shift market expectations about future Federal Reserve policy and further influence uh, the direction of United States dollar. Okay, next we discussed about the euro dollar and US dollar Swiss franc previously. Let's take a look at the euro dollar. I just showed you the chart of euro dollar that we were expecting. Over here, same goes over here. We got the top when the RSI went above the 70 level. This is the weekly target of euro USD currency pair. But I was also expecting a bounce back up. Maybe we could get a retest, so we got it, and the forecast did work. Plus, we got the number. Let me go back a little bit. The number that we got with the University of Michigan consumer sentiment, we got a bad number. That's 50.8. So due to this reason, the euro dollar currency pair, it did go higher as expected, and it actually retested this broken support level, which is now acting as a resistance area. Next one is the US dollar Swiss franc. Okay, Swiss franc, I think is trying to rise up from current levels. This was the breakout point. Let me move this one over here. So market, I think, manages to clearly close higher. If we go over to a smaller time frame, let's take a look at a 1 hour chart over here. You can see we got this nice downtrend going on. And within this downtrend, we got this wedge shape formation. I'm going to change the color to yellow. Okay. So if I remove the previous trend lines, the red ones, you can easily notice that it's trying to print a bottom over here basically, and the chances are high that the US dollar Swiss franc currency pair is probably going to rise up. Okay, especially if we get a break to the upside. So if I go back to the 4 hour time frame, this is the forecast. Okay. Okay, let's go back to the PowerPoint presentation. Okay, so next one is the macroeconomic events and data releases, the current week fundamental analysis. The German Flash Manufacturing PMI, that's related to the euro, and the most prominent currency pair in this scenario is the euro dollar currency pair. So we'll get this on 22nd, and then we have the retail sales data report. M over M means month over month, so that's related to the United Kingdom, and the GBPUSD currency pair is the most prominent currency pair in this scenario. Okay, so let's talk about it, what it is. So what is the German Flash Manufacturing PMI? Well, the German Flash Manufacturing PMI stands for Purchasing Managers Index, is a leading indicator of manufacturing sector health in Germany, the largest economy in the Eurozone. Based on a monthly survey of purchasing managers, it covers key metrics such as output, new orders, employment, supply delivery times, and inventory levels. PMI reading above 50 signals expansion, while a reading below 50 indicates contraction. Since Germany's manufacturing performance significantly influences the broader Eurozone economy, this release is closely watched by investors, policymakers, and traders. So on May 22nd, the previous number we got is 48.4. The forecast is 48.8. The actual data did not release yet, but we will get it on May 22nd. And as far as the market expectations are, well, market is are expecting a slight improvement in the German flash manufacturing PMI, rising to 48.8 from 48.4, although still in contraction territory because it's still below the 50 number. The anticipated uptick may suggest that manufacturing conditions are stabilizing after months of weakness. Nevertheless, the overall picture remains fragile, with sluggish demand, high input cost, and geopolitical uncertainty still weighing on sentiment. So the potential market impact on euro dollar would be if the PMI we get is higher than the expected 48.8 number, then it means a stronger than forecast result may ease concerns about the Eurozone industrial outlook and reduce expectations of imminent ECB policy easing. This could strengthen the euro. Let me show you the chart of euro. Okay, and we might get a further upside in euro dollar currency pair, but the expectation is the market expectations or the forecast number is 48.8, so that's still below 50 number. So if we get 48.8, that's still below 50, then it means that euro dollar is most likely going to drop. So we will see how it goes. My forecast is price action is most probably going to print a top and it's going to drop lower. Okay. So the overall analysis is as the European Central Bank remains cautious amid mixed economic data, the month of May German flash manufacturing PMI will be a key data point for gauging industrial momentum. Any surprise, positive or negative, could influence the short term Euro USD movements, particularly if it shifts expectations about the Eurozone's recovery trajectory and the ECB's policy stance. So the conclusion is ahead of the release, Euro USD may remain range bound. It's most likely going to move in some sort of a trading range, and I do not expect new highs or new lows. However, I do expect a top in euro dollar. We will see how it goes. So once the data is published, a stronger print could offer near-term support for the euro, while a weaker than expected result may deepen concerns about eurozone stagnation and weigh on the euro USD accordingly. So the forecast for the German flash PM manufacturing PMI data is 48.8, so that's still below 50. So if we get this number, the chances are euro dollar going to fall down. Okay. Next one, let's go back to the PowerPoint presentation. Next one we have is the retail sales, M over M. M over N means month over month in the UK. So what is retail sales? Over month measures the percentage change in the total volume of retail goods in Great Britain year-on-year. It's a key indicator of consumer spending, which is a major driver of the UK economy because household consumption represents a significant portion of GDP. Retail sales figures are closely watched by policy makers, traders, and economists. A higher reading generally signals strong consumer demand supports the British pound, while a lower reading may indicate economic softness. Now, the previous number that we got as far as the retail month-on-month number is, the previous data we got is 0.4%, and the forecast or the expectation is 0.3%, which is basically less. The actual data did not release yet, but it will get released on May 23rd. So markets are anticipating a slight decline in the retail sales growth rate from 0.4% in March to 0.3% in April. While still positive, this slowed by ongoing cost of living pressures in the UK, rising credit costs, and cautious spending behavior amid economic uncertainty. Now, the potential market impact that we are probably going to get as far as the GBPUSD is concerned, this is the weekly chart of GBPUSD currency pair. If you take a look at the old swing high over here, market is actually trying to retest this level. This could probably turn into some kind of a double top pattern. And in 4 hour time, I was expecting market to drop, but it didn't. So we'll see how it goes. The way I see GBP USD currency is probably going to drop because it's hitting this upper resistance level. The RSI is also hitting, it's almost there to reach the 70 level. And if you go to the daily, in daily time frame, it's actually an overbought reading with RSI. So the expectation the expectation is also 0.3%, so it's less. So if the retail sales match the expectation, which is 0.3%, that is a result in line with the forecast, may lead to a muted reaction or a sideways price action in GBPUSD currency pair. And the currency pair may remain range bound unless additional economic reports or BOE commentary shift the market outlook. And let's assume if the retail sales are weaker than expected, weaker than 0.3%, that's a disappointing reading, and that could suggest weakening demand and fuel concerns over a slowdown in United Kingdom growth. This down, pushing the GBP USD lower as traders increase bets on Bank of England policy easing. So the overall analysis is that with inflation gradually easing and the BOE adopting a more cautious tone, the May's retail sales figures will serve as a key test of consumer resilience. A strong data may bolster the case for holding rates steady, while weak figures could increase the likelihood of rate cuts later this year. The market is basically expecting a weaker number, which is the 0.3%. The previous month number was 0.4%. So the chances are GBPUSD is most probably going to drop. So ahead of the release, GBPUSD may remain in a tight trading range as the market awaits fresh insights into the UK consumer behavior. Once the report gets published, the retail sales report could act as a price action, especially if it significantly deviates from expectations and alters the interest rate outlook. As far as the forecast is concerned, the way I see price action is probably going to drop from current levels. That's what I expect. But we will see how it goes. Okay, let's take a look at euro dollar, British pound, and Australian dollar and spot gold pairs. Okay, euro dollar, I just discussed that we're expecting a possible top inside the euro dollar currency pair, and the reason is we got overbought market environment. RSI went above the 70 level. This could also turn into a possible false breakout as well, and market is actually retesting this broken resistance level over here. Regarding the British pound, we just discussed that the GBPUSD is testing the old swing high in a weekly time frame. The daily chart looks overbought, the RSI is overbought, so probably in 4-hour time frame we're going to get a drop in price action of GBPUSD currency pair. Next one is the Australian dollar, AUDUSD currency pair. Okay. Okay, AUDUSD currency pair is falling down right now, and the way I see it is probably going to drop more. The long-term scenario also suggests that market is going to fall down. It's going to retest the support over here at 0.6175 area, which is actually in lines with the previous old swing low over here. So on a short-term basis, the chances are AUD USD currency pair is probably going to drop more. Next one is the spot gold. Okay. Okay, if you guys remember, last week we discussed about a potential bottom in spot gold, and this is what we are getting right now. Market actually bounced back up from the lows. So I was expecting a new low, we got it, and now it seems to me the spot gold is trying to rise up from current levels. If you check out the short-term chart, like a 4-hour time frame, which was providing support, if I move this one down over here, this is the right over here. Last we have is right over here, 69. That's also the way I we also discussed about the retail sales month over month in the UK, and then we did some analysis on the euro dollar, GBP USD, AUD USD currency pair, and spot gold as well. So these are the trading instruments that need to watch out for profits. What you should do next, well, you can stay tuned for the schedule of next week's trading webinar. You can subscribe to our social media pages to stay updated with the true exciting events, trading content, and market insights. And if you want to learn more about trading, visit Trade Geek and access free trading courses. They're available online for free for beginners, intermediate, and expert traders. Thank you for hanging around. See you at the next trading webinar on Tuesday, May 27th, 2025. So that's pretty much it for my side. Have a nice day and bye bye. See you on the next session.